Good morning. Welcome back, everyone. Today we are taking a look at a new stock. It is going to be Alphabet Incorporated, which is Google. The reason we're looking at it is because they have earnings coming up, and it's actually at a point where I would be looking for a short. We're going to see if that short is a smart idea or not, but just keep in mind that this was the last point of major liquidity. We've actually done a few weeks of basically dancing around this level with this wick rejection, double wick rejection. This is what people will be like, oh, it's double topping. Well, the point of the matter is that right now, if the volume of the buyers does not step up, this will go roll over and find some support on some averages. And that's what we're going to take a look at right now. We're already on the weekly chart, and you could see that the next level of support, which is pretty clear, is right over here at around 182. And I've already done some fibs for you, but the fibs will show up for you right here. There you go. So this is what I'm looking at right now. The major level of resistance is over here at 206. This is the level that I expect to be broken if earnings is looking good on February. Let's see exactly what day it is. February 4th. Okay, so that's when their earnings is going to come out. So by February 4th, I'm looking for it to either take out 206 and look for a leg up, or we're going to be looking for some downward continuation. Ooh, you know what I should do? Let's just make some random guess as to where we can see it go up to. So if we lose this 206 level, we can look for 227 to 240. And that's just like a range, basically. Like, we can look for some this is like a leading indicator, so this is where we expect it to go. This over here is the EMAs are a lagging indicator, showing you once the data is already closed. Like, this is off of candle closes. This is what we think, this is just a prediction. It's not even accurate. It's just a guiding tool. Okay, so what was I saying? Okay, so yeah, basically 206 level on earnings. If it's good, we can look for it to go break into the 204, 220. If before earnings, these people want to shake people out, you can see us playing out something of this nature. Like this. Shift. Okay. And basically, what we can look for is if they want to flush the liquidity to the downside, the first level of support is that 179.68, and then we can look for a deeper dive into 166.50, and then we could look for that continuation back up. Okay. If we lose this level over here, the bottom of this channel, which is around 163, you got to assume that the next target will be 150, and technically could even go lower to 134. Now, this is a weekly chart. It's going to take time for something like this to play out, but if you go to a higher time frame and turn off all these drawings, you can see that on a monthly for January right now, this can be potentially a doji. This can only be reverted if we take out the top around that 2026. What was it? 206. So with candle open and closes above 206, we can look for continuation to 220, whatnot. But if this is how the monthly closes, next month you have to assume probably a reversion to the mean kind of situation. And if you were looking left, okay, I would assume that we're like in this stage right here, right around here, because the monthly earnings has not come out yet, right? I mean, the monthly earnings is next month. This month you still have 2-3 weeks left, and you could still do some kind of a doji situation or straight up flip red. So keep that in mind, that that's your level of risk, basically. If you're taking a short from 194, you better have a stop loss of f 206. If you're looking to get a long, go ahead and take a long here, but have your risk managed around 184, 185. Any lower than that, you have to be prepared for that deeper dive. right? So if you're taking along here right now at 194, I would have a stop loss $10 underneath like 184 and hope that you get to that 204 before you actually get a flush to the downside. If you get the flush to the downside, just know exactly where you can look to add to your 194 position, such as 180, 165, and that's going to you should be doing that on a weekly time frame. You know, as in like 1 week, if it goes to 160, add it. Wait for the next week. If it bounces back up, just chill. The week after that, if it comes down and takes out the liquidity under 165, add to it. And then the week after that, if you just pumps above all the tops, start taking some profit. So it's like you're doing a little dance with the market. Like, see, the market is like up, down, up, down, up, down, up, down, up, down. It's gonna do that forever. So just understand uh, where the market is on consolidation, like the price wise, and then trade it accordingly. While I was just doing those doodles, I just spotted something. This is probably a warning for you guys. This is already looking like it's gonna roll over to me, and that's why I gave you this doodle of the possibility that this is gonna roll over. And you should use these Tory trend lines as a potential area to know when it's time for something else to occur. What do I mean by that? Okay. So if you get a move to the downside and you get a little bit of a pause in this area around 177, it's probably a good buying opportunity because it's the bottom of the expanding wedge channel. It would probably be a third tap too. Yeah, it would be a third tap. Now, if you lose price action in this channel, you will come to retest it, and then you could probably reject down to this 150. Okay. If you do this kind of consolidation, oh, what did I do? Yeah, if you come down here, do all this kind of stuff, and you actually consolidate underneath the half of the channel, then obviously you're going to be looking to take some liquidity down like this, and then you could reverse it back up kind of situation. So that's a warning, and that's basically you using the mid of the channel as your bounce, dead cat bounce. If you bounce above the mid of the channel, then you can look for upside. If you bounce below the mid of the channel, you should prepare for some potential downside. And I should do this very, very clearly so no one's like, what are you talking about? There you go. So you see this is above the channel. It should be short, fast V-shaped recovery. If it's a rounding bottom also is good, but if you do too much time here and it's been like a couple weeks, more than likely you might take that liquidity to the downside because the buyers are not buying it up. That's why you're stagnant in a range, right? So that's what I think about Alphabet. I think Alphabet's a great company. I do think it's overbought, so coming back a little bit is not gonna do anything to you. I'm trying to see. Okay, the earnings have been great for per quarter, so more than likely you can see a pause, a little trickle down consolidation into the 170s, low 80s, and then you could see a pop up after February when the earnings come out because every earnings has been doing pretty good. So I don't know why this would do any different now. There's nothing that has really changed. Yeah, yeah. I think don't let the market fudge you out until you lose the level on the bottom of the expanding wedge. I would not look for further downside. I would be looking at this as a bullish retest of support into the 170s, 177 if you could get it, and then a reverse back up, probably on good earnings sentiment and good for forward projected earnings at the earnings call. So that's kind of how I would play this one, guys. If you guys have any questions or concerns, hit me up in the comment section below. I'll be more than happy to get back to you. Please leave a comment to let me know how I'm doing. Let me know if there's another coin, crypto coin, or a stock asset you would like me to do the video on next. I'll do that. Aside from that, have a great day. Enjoy your weekend, and I hope to talk to you guys soon. Yeah, bye bye.